Hey, what's up, guys? So right now I am reading Trading Price Action Trends by Al Brooks. It's a fantastic book, and I've been learning an insane amount of stuff from it. And one of the things that he suggests is going back through a chart and seeing all of the good entries and exits, etc. So that's kind of what I did today. And it was actually really, really informative, and I was able to recognize a lot of the stuff from the book that he's been talking about and start adapting it. So with no further ado, I kind of want to just go through some of the trades and show you some of the stuff that I had been seeing, and we'll go from there. So I didn't get super far back. I think we started right here. So this was a really big bearish decline. I mean, you can see how far back it goes. So it was pretty much inherent that it was going to bounce at some point and kind of retrace, or at least do a partial retrace. So you can see here that it hit the floor, and then you got two identical bars right there. And that's usually a pretty good sign of a reversal when you have two identical bars that are opposite in color. So yeah, basically you can see that it hit support and then was rejected, and then that bar reversed the previous bar. So it basically closed at the open or above the open of the previous bar, so it reversed it essentially. So now the market's going in the other direction. So yeah, that was the first good trend bar, and it also had a good follow through bar. You can see that the bars are meeting end to end, which is a really good sign. You know, if you're getting a lot of overlap with the bars, that's generally not a good sign. Yeah, you don't want that. It's actually kind of called barbed wire. Like just in this area, like if I move see if I can get my drawing tool out. There we go, brush tool. So something like in here, there's a lot of overlap. Al Brooks calls that barbed wire. So never want to trade in an area that's got a whole lot of overlapping bars. I mean, right there is just a period of consolidation, but I'm talking more like a very wide range of bars. So anyways, bullish uptrend right here. Really nice follow through. And then it mostly traded sideways. No, it's a slow decline. Okay, and then it finally hit resistance, and then you can see you've got two more identical bars right there. So yeah, that was the reversal signal. And then it looks like it tried a little bit more, and then it reversed again. So you could have entered right at the reversal, but it might have been safer to go to wait for the follow through and actually enter right there instead, rather than just entering on the reversal signal, to actually wait for more price action. A lot of reversals fail. In fact, most reversals fail. So for beginner traders especially, don't don't trade them unless you have like a perfect setup. It's for that reason it's often better to wait for a pullback and then enter, or at least wait for like a follow through bar and to make sure the stock is moving in your direction. Oh, and also speaking of stocks, we're looking at the S&P 500 right now, the futures contract, the E-micro future contract. If you didn't know what the MESU 2019 was, so yeah. So basically this is just like the futures version of the SPY. Anyways, so we've got our bearish entry there, and you can see it kind of starts slowing down with a bunch of smaller bars, and then you've got a pretty big bullish trend bar there. So you've got that big bullish trend bar, and then you've got no follow through bar after that. So you could see that it was kind of the bulls just didn't really they had no follow through buying. So maybe the bulls were just kind of a little bit hesitant. So it mostly just traded sideways and was kind of entered a trading range. There eventually was another follow through bar up ahead, as you can see. But it almost looked like it reversed there. It was a failed reversal. That one red bar, that's a hammer. It's got that really tiny body up on top. I'll see if I can pull it out here. Oops. Let's try that again. Well, you can see it. It's pointing right to it. Yeah, that guy. It's called a hammer because it's got the little block on top and a small body, and then it's got a long tail. So you can see basically it tried to get pushed down. The shorts tried to go in, and it got rejected. And then they had to cover basically, and that made the stock go up more. So let's erase that later. Okay, and then coming up to this one, you've got a bunch of dojis in a row. And dojis are this kind of little cross-looking things. It's where a security will close right at its open. So right here, you can see the security will open and then get pushed down, and then will get pushed up, and it'll close right at its opening price. And then you got a bearish bar, and then a little tiny bullish bar, and then you've got a couple more dojis, but then it finally hits. And that entry bar there is called it's either called an inverse hammer, or a lot of people call it a shooting star. And the shooting star tends to resonate better with me because when you think of a shooting star, you think of things going down. So that can be helpful. Anyways, so that hits, and then you've got a nice bearish downtrend here again. And then this right here is really interesting. So it finally hits the deck. You've got a bullish trend bar, really nice bullish trend bar. And then it almost looks like you're going to get a reversal. So you've got these bearish bars that they do reverse. It's not a clean reversal because it's in two bars, but they do reverse the bullish trend bar. But then you've got another bullish trend bar. So it looks like it's going to be a failed short. And then you've got another follow-through bar after that. So now it definitely is a failed short. And now the shorts have to cover, and then that pushes the security higher. So then you've got a really nice bullish uptrend there. And then comes down after that. And then so you've got that bearish trend bar there, and then it hits a hammer that, again, it's got a small body. It's like the upper third. I'll see if I can get a line to it. I suck. All right, so I can't draw with this, but it's oh my god, what is going on? All right, it's right next to my mouse pointer, basically just to the right of it. Anyways, wow, that really did not work. I apologize. Anyways, so wow, looks like I had a 4-year-old drawing all over my charts. That looks fantastic. Anyways, so you've got this this big bearish trend bar, And then you had the next bar that where price went down and gets rejected, and then it closes near its open, which is kind of even though it's a red bar, it's a bullish signal, because it basically shows that price is probably not going to move much further down, because it's hitting support. You've got another hammer, which flips to a green candle. That's a good bullish signal. Then you've got your follow-through bar. So then you might want to go long at that point. And it would be awesome if you did, because you've got this massive spike right here. So yeah, you could have gotten that there at the top. However, it was just this massive spike, and it didn't have any support behind it, so it was bound to collapse, which it certainly did. So you could have gone short at that, when it was looking like it was going to reverse there. So it started coming down. It went into this massive doji there. So it looked like it might bounce. And then it tried for a little bit. And then you've got that. So it was just hitting weakness, that small red bar at the top, and then it dropped. And then it just closed out the day right there. So all super interesting though. But yeah, basically this stuff is just, you're breaking down what different bars look like and different situations that they might come up, and how to interpret those situations into making intelligent trades, basically, and reading chart patterns and everything. But this stuff is a lot to take in. I mean, the book that I'm reading right now, it's 450 pages. It gets really, really in depth. But Al Brooks is fantastic, and I definitely recommend the same book that I'm reading. It's called Trading Price Action Trends. If you're interested in this stuff. So, anyways, thanks for watching, guys. I hope this was helpful, and yeah, definitely recommend this practice. It was definitely beneficial for me, going over the chart. And TradingView even has a replay mode where you can go back to a particular period and have it like replay what it was looking like up to prior to, so you can like basically rewind to 9:45, so you can see what it looked like prior to that breakout happening, which can be really, really helpful, because that the breakout is going to be coming up, but you can see how the stock was behaving leading up to that point, in real time. So anyways, thanks so much for watching, guys. And this, by the way, if you didn't know what TradingView was, that's the app that we're currently using right now. It's a free app. Yeah, so take care, guys. Bye.